on the sidelines of Malaysia's Invest ASEAN Conference up in Penang, Malaysia. We are now joined by Anand Pathmakanthan, who is the regional head of equity research at Maybank Investment Banking Group, to tell us why they're rather optimistic despite what we've seen as a patchy and rather uneven start to the year for equities across Southeast Asia. Anand, thank you so much for joining us today. So I'd like to get straight into it. I mean, as we've noted, it's only the VNI index in Ho Chi Minh and the Malaysian KLCI actually in Kuala Lumpur that have impressed so far year to date. But you might argue that most other indices and most other stocks across the region have been rather lackluster, a bit sluggish throughout the year. Why is Maybank rather optimistic that we might still see a good or a significant upside, at least, for equities across Southeast Asia?
Yeah, morning, JP, and thank you for the question. I think you're right. It's been a very sort of segmented performance by ASEAN markets year to date. Vietnam, Malaysia, solidly in the positive territory year to date in terms of gains. And you've had a lot of laggards. Indonesia, Philippines, and Thailand are still in deficit or down about 3 to 5% year to date. Overall, the drivers for the markets have been quite domestic in nature. So for Malaysia, as you've already touched upon, we've been seeing quite good momentum on fiscal reforms and policy execution. A lot of this was already flagged well in advance, including diesel subsidies, and that's being taken very well by the market. We're actually seeing execution follow through on policies. And for Vietnam, we've seen a lot of FDI coming through. We've seen a big manufacturing sector recovery. Exports are up 15% in May. So the macro data is good. So those two markets have very solid domestic drivers. I think when you look at the laggards, like Indonesia, we're still waiting for the cabinet to be formed and policy formulation to pick up with the new government. And Thailand as well, we're just seeing fiscal disbursements starting to pick up very aggressively since the budget was passed in April. So I think for those laggard markets, we are positive that it will catch up in the second half because we can see the light at the end of the tunnel. Yeah, the fiscal impact is going to be felt in Thailand in the second half of this year, and that's going to boost GDP growth and market earnings. Indonesia as well, the cabinet will be formed, policy will start being made, fiscal spending will probably pick up as well. So for those reasons, we think those kind of markets those laggard markets will play catch up.
Now, since one of the big drivers we're tracking so far in Southeast Asia this Monday is the rationalization of those fuel subsidies in Malaysia, these fuel subsidies can be seen as a bit emotional or political in nature as well, and could actually lead to some inflationary uptick. Now, the Bank Negara Malaysia governor has said that it won't lead to a significant uptick in inflation, but do you think that this could provide short-term headwinds with regards to consumer sentiment, perhaps the equity outlook in Malaysia, and could this actually leave certain sectors perhaps vulnerable, or do you think it's something that we can at least just take a pause on and perhaps not make too much of a fuss about?
I don't think we should get too carried away with the diesel subsidy removals. I mean, as I mentioned before, they have been well flagged. They're coming in at a time when inflation is below 2%. So we do have some inflation headroom from higher diesel prices. And as you said, we're not removing diesel subsidies completely. They're going from blanket to targeted. So there will be fleet cards. There will be direct cash transfers for the more vulnerable parts of the population to tide them through these adjustments. So I think we should view this diesel subsidy removals or adjustments from a broader lens. If you look at what Malaysia's been doing year to date, we have been going through a lot of subsidy cuts already. We've used the electricity tariff subsidy, especially for upper income households and businesses. We've reduced subsidies on things like sugar, chicken. So this is just a continuation of the subsidy reform agenda in Malaysia, and then it's been well flagged. So I think the markets will be more impressed by the fact that the Anwar government is carrying through with promised reforms, which we really do need to get the fiscal situation on track and to meet our fiscal targets. So I think that's the bigger sort of takeaway for the markets, rather than some potential uptick in inflation or incrementally weaker consumer spending.